I was looking at something which blew my mind. HDFC Bank went public in 1995. This is India's largest bank by market cap, $150 billion market cap. It's one of the great compounders in the country. And yet, in not a single year of its existence, has it been the best performing bank stock in India. Only Indian bank in the top 10 in the world. The most commoditized aspect of financial services lending. A lender can only differentiate itself from other lenders on three fronts.
Is HDFC Bank still the next HDFC Bank?
No other bank in the history of India has remotely been able to grow so fast. HDFC Bank is staying away from the fads and fashions of the day, maintaining discipline. When other people throw in the towel, they're moving in and making a killing.
Hi, and welcome to another episode of The Spotlight. On the 14th of March 1995, HDFC Bank's IPO opened to investors. Incredibly, this was just a month after the bank opened its first corporate branch in Worli in Mumbai. The IPO was oversubscribed 55 times as the bank raised 50 crores. As a sign of what a different world it was back then, the bank finally listed on the 1st of May at 39 rupees and 95 paise. Today, HDFC Bank is not only one of the largest companies in India, but one of the most reputed banks globally. In this episode, I'm joined by Marcellus Investment Managers founder and CIO Saurabh Mukherjea. While Saurabh's admiration for the business is well known, I asked him to come on the show to showcase stories, events, and people from the bank's history that aren't commonly known, but more importantly, to explain what has enabled the phenomenal rise of India's biggest bank. I do, of course, ask him the million-dollar question: is HDFC Bank still the next HDFC Bank? I hope you enjoy our conversation as we put the spotlight on HDFC Bank. As always, nothing in this video or on this channel is investment advice, nor a recommendation to or not to buy, sell, or hold any security. I also want to thank the folks at Apar Industries for partnering with us on this video. Visit apar.com to see how Apar Anushakti's e-beam technology can safeguard your house for decades to come. Apar Anushakti wires. Is tar ki Shakti Apar. We're happy to partner with the Zerodha Media Network to bring you useful and interesting information and insights from the world of business and investing. So go ahead and like, subscribe, and hit the bell icon. Saurabh, in our last conversation, you claimed that you're not tired of answering questions on HDFC Bank. I thought, why not put that claim to the test?
Thank you so much.
So, everybody knows of HDFC Bank, at least in India, and how large the bank is. But I don't think a lot of people appreciate, just how large it is and how important a company it is to the Indian ecosystem generally. Could you set the scene for us, by talking about just how large the company is, but B, and more importantly, its salience to the overall lending and financial system of India?
Sure. So before I start talking about HDFC Bank, I think I would like to say we're having this discussion in the spring of 2025. My submission to those who are watching is that in case you're watching and you don't know much about HDFC Bank, it's highly likely that in the next couple of years, you'll know plenty about HDFC Bank. The state of the financial system is such that HDFC Bank, I have a strong suspicion 2 years hence will be utterly central to India's fortunes, even more so than it is currently. But let me get back to answering your question, Krish. So let's start with some basic numbers, right? This is India's largest bank by market cap, comfortably so, $150 billion market cap. It's the only Indian bank in the top 10 in the world, the only Indian bank in the top 10 in the world when ranked by market cap. By assets, it's the second largest bank, second obviously to SBI. By assets, it's around $300 billion. So $150 billion market cap, $300 billion of assets, right? If we try to contextualize it in the relative to the broader financial system, HDFC Bank has 11.5%, so let's call it 12% share of deposits in our country and 15% share on the assets side of the country. So in terms of loans outstanding in the country, 15%, in terms of deposits, 12%, right? If you add up HDFC Bank and HDFC Limited, given that they're merged, you add them up, this colossal entity has doubled its market share in the last decade, right? It's doubled its market share in the last decade. No other bank in the history of India has remotely been able to grow so fast over the last decade or indeed any other decade. So this sort of growth rate what HDFC Bank has demonstrated over the last 10 years is unprecedented in the history of our banking system. I suspect not too many banks anywhere else in the world would have also grown at such scale. Another way to contextualize it is it's 2x the size of Citibank by market cap, right? Just another way to think about it. Now, leaving aside these numbers, HDFC Bank, ironically, is not just a bank. It's a financial super house, I would call it. Not even a supermarket, it's a financial super house. It owns HDFC Life, which is India's second largest life insurer after LIC, right? It owns HDFC Asset Management, which is India's third largest mutual fund after SBI and IPRU. It owns HDFC Ergo, which is India's fourth largest general insurance company. It also owns HDFC Securities, which is a large brokerage, and it also owns HDB Financial Services, which is an NBFC. So when you consider HDFC Bank, you're basically not just looking at what the RBI would call a systemically important financial institution. You're also looking at a entity which is omnipresent across every facet of financial services. The reason we at Marcellus are large shareholders, it's part of my Marcellus portfolio. It's part of my parents are also part of Marcellus's client base, and so are 4,000 clients. The reason we have a large chunk of our money here is we know that PSU banks have 60% market share, and as night follows day, over the next decade, PSU banks will end up ceding a big chunk of that to the private sector lenders, amongst whom HDFC is the largest, right? So in a nutshell, it's a colossal bank. We keep discussing about Indian businesses acquiring world scale. This is a business which is sort of mega scale, even by global standards, in the top 10 in the world. And it's done a bunch of things we can discuss over the next few minutes. It's done a bunch of things which in the context of our banking system put it head and shoulders above any other private sector bank.
The size that they've achieved so far, do you see it partly a cause for celebration, but also partly a cause for concern in terms of how much headroom there is to grow? And do you think that eventually they'll hit a ceiling where they may grow, but it's tough for them to grow faster than the market as a whole?
I wouldn't think so. The reason I don't think growth will be a challenge is in terms of shares, right? We discussed 15% market share on the lending side and 12% on the liability side. So in a way, the story's only just begun, right? We have many other large industries in India where market shares are far more consolidated than this, right? And banking the world over, Krish, banking the world over is known to demonstrate economies of scale, provided the regulator doesn't get in and deliberately create fragmentation. So in America, the regulators tried over the last 100 years or so to create deliberate fragmentation, but the rest of the world has demonstrated that if the regulator doesn't step in, banking leads to natural consolidation, oligopolistic constructs. So UK, France, Japan are examples of highly consolidated banking systems, and I suspect India too will head in that direction with HDFC Bank and amongst the other private sector banks. ICICI Bank also will be part of that consolidation. So very small market shares in the context of the broader banking system. And again, the other reason I don't think growth will be a challenge is 60% of the shares will be PSUs, right? All of us have banked with PSUs. We still try to bank from time to time, not least my parents who have a fondness for PSUs. And to call it a difficult experience, I think is putting it politely. So the PSUs have their own challenges. They've always had, and I think that means that the private sector will gain share. If you put that in the context of a broader country where nominal GDP growth will be around the 10% mark, the banking system will grow at 10-11% in terms of nominal growth. If the PSUs gain share from if the private sector gains shares from the PSU, the private sector banks will grow at 13-14% quite easily. If broader economy growing at 10-11, private sector gaining share from PSUs, thus growing at 13-14, and there's many different ways to skin this cat, but our reckoning is HDFC Bank growing earnings at high teens for many years is the most likely scenario.
So this actually brings me to what I really want to spend the most time on in our conversation, which is actually understanding the flywheel that HDFC Bank has sort of built over the last 3 decades that has enabled this kind of growth. Can you explain to me, what are the different ways in which the bank makes money? But more importantly, what has it done and or not done that has enabled it to grow in the manner it has?
Sure. So I think I'm really glad you asked the question. A lot of people who denigrate HDFC Bank, they do so because the stock hasn't gone anywhere in the last 3 years. But ironically, when they denigrate HDFC Bank for the lack of stock price movement in the last 3 years, they also betray their ignorance of how difficult it is to build what they've built. And they also betray their ignorance in the same breath about how hard it will be to match what HDFC Bank is doing. So let's get into what you call the flywheel. So we start with the basic observation that a loan is the financial services, the most commoditized aspect of financial services, lending, right? I haven't met too many people who wake up in the morning and say, "Boss, HDFC Bank se loan lena hai aur kahin se nahi lena." Nobody says that, right? You just want a low cost loan. The lower the cost, the better, right? So even keeping that in mind, a financial services company can only differentiate itself. A lender can only differentiate itself from other lenders on 3 fronts, right? The first front is its cost of deposits, its cost of liabilities will be lower than the other lenders. So you can have low cost liabilities. That's the first lever we can think about. The second lever is that lender, the bank, will do cleverer, more diligent, better underwriting, more systematic, more honest, better corporate governance and underwriting, right? So that's the first lever is cost of liabilities. Second lever is underwriting of assets, underwriting of loans. And the third lever is operational efficiency. Saste mein, kam kharche mein dukaan chalana hai, right? Those are the 3 levers. That's the only 3 ways one bank can distinguish itself from another in the context of what is a heavily regulated industry, right? Now let's delve deeper into these 3 aspects, right? Let's start with liabilities. When it comes to deposits, right, liabilities or deposits, a bank really has only 3 ways of raising deposits, right? So first is called savings accounts. That's say Saurabh Mukherjee, being an HDFC Bank savings account customer. So my salary account is with HDFC Bank, and therefore HDFC Bank gets my savings at low cost. The second is what's called current account, right? So current account is Marcellus's current account, not Saurabh, Marcellus's. So corporate accounts, corporate deposits are called current accounts. And the third is fixed deposits. So Krish or Saurabh saying, let's stick some money away for a year, couple of years. So in my case, my kids are going to go to college soon, so I have some money set aside for them in FDs. On FDs, banks have to pay a pretty punchy rate to the customers, and therefore the low cost deposits are the first 2, current account and savings account. Ironically, HDFC itself coined the term CASA. Ka for current account, Sa for savings account. It means current and savings account, and HDFC Bank coined the term. Now, where for the first sort of driver of their flywheel kicked in the 90s was Aditya Puri, the legendary CEO who ran the bank till 5 years ago. He came up with a range of novel interventions to generate low-cost CASA, right? And he was the first banker in India to hit upon these. So, for example, till the late 90s, cooperative banks in India cooperative banks still operate within a tiny geographical region. At most, a cooperative bank will operate in the geographical confines of a state. Usually, it'll be even within a chota area, say Navi Mumbai or Pune, right? So if a cooperative bank customer cut a check made payable to some other state, that was super painful because the cooperative bank wouldn't have a branch in that state. So what would happen is the customer would first have to have money in his cooperative bank account. So this cooperative bank would transfer money to some other bank in some other state. That bank would then transfer to its customer. So that whole process would take 4-5 days. So in the late 90s, HDFC Bank came up with a new solution. It went to all the cooperative banks and said, "Ab sab jan, all of you become clients of ours. All of you open current accounts with us." And that way, all you have to do is you have to do a ledger entry. So a cooperative bank in Gujarat could pay another one in Tamil Nadu in 24 hours because it was simply a ledger entry on HDFC Bank, right? So in banking jargon, all the cooperative banks could issue what is called at-par checks to their customers across the country. So neat idea. It's a win-win because the cooperatives are winning. They're telling their customers, "Boss, you too can pay customers and your friends in Tamil Nadu this evening. Don't have to wait till 4 days." HDFC is getting low-cost current accounts, and the customers are getting speedy payments, right? Then a similar and equally novel intervention was with the stock market in I think 96 or 97. I've actually written a book on this. It's a book called Unusual Billionaires, where there's a chapter on HDFC Bank where I've recounted these stories. So till 96, the stock market used to have what's called sort of manual settlement. So if I bought from you, say, Asian Paint stock, if I bought from you stock, I would have to pay my broker. My broker would have to pay your broker. Your broker would have to pay you. So वो करने में again 4-5 दिन निकल जाता था. So once again, enter HDFC Bank with a novel solution, saying that all of you in the stock market should just open accounts with us. So Saurabh and Krish, you open accounts with us. Saurabh's broker, Krish's broker, open accounts with us. Mr. Stock Exchange, you also open accounts with us. And thus, when Saurabh buys shares from Krish and has to pay Krish, it can be done through electronic transfer, real time, rather than this 4-5 day ka lafda, right? Now, although it's a win-win for everybody, you can see the big win is HDFC Bank, because HDFC Bank got the entire float of the stock market, right? The customers, the brokers, the exchange, sabka float HDFC Bank ke paas aa gaya, and as a result, what's called cash management revenues, right? So cash management is you help a company like an Asian Paints, or you help the stock market manage its cash, right? Or you help a Unilever collect cash from dukandar, or you help Marcellus pay its employees' salaries on time. That entire business, right, grew 30-fold. Revenues from cash management. The revenues from cash management grew 30-fold between 2001 and 2011, right? So not only did they get car, दबा के पैसा बनाया, because they would obviously charge, if a Unilever said कि सारा जो किराना stores or distributors who want to pay me, you sort this out, HDFC Bank, and get me the money from these 10,000 distributors fatafat. HDFC Bank was, of course, sir, and they would get the float, and that cash management flow business would also have other revenues, fee income revenues associated with this. So the current accounts grew at 20-25% through 2001 to 11, but the whole revenue around cash management also grew 30-fold, right? So the first leg of the flywheel, the liabilities leg, is really around a whole bunch of novel interventions to juice the car and the SA. I could go on with examples, but I think beyond the point, people will get bored with my fanaticism on this subject, right? Now we come to the lending piece. So remember, 3 drivers. You can have low-cost liabilities. We discussed that. Now let's come to lending, right? In contrast to almost every other lender in India, HDFC Bank, for its entire existence, has said we will not bet the ranch on any sector. We will be big on retail. Half the book is retail. Even on the corporate side, we will not have high exposure to any one sector. Right? In a country where banking, like the stock market, is very interesting, right? But bankers and stock market are sort of first cousins, I think. And stock market also says, boss, abhi to tech mein ghusna hai, abhi tech se nikalna hai, abhi pharma mein ghusna hai. Bankers also like that. From 2009 to 2013, I remember everybody wanted to do project finance, right? Lending to a power plant or an airport or a infrastructure project was seen as a really hot, sexy thing to do in that 2009 to 13 era. HDFC Bank said no interest, relax. When everybody else lost their shirts, all the other banks lost their shirts, HDFC Bank then stepped in. Similarly, I migrated to India in 2008, but I used to visit through 2004, 5, 6, 7. And I used to sort of stand at airports or outside shopping malls, and people would come and say, credit card le do. I would think, what an amazing country. You can be eating a golgappa 1 minute and next moment you have a credit card in your hand, right? And HDFC Bank wasn't part of that credit card craze that gripped India 2004 to 7. Similar things, by the way, happened recently. You go to the airport in Bombay, Terminal 2, right? You're trying to get to your flight and 3 people offer you a credit card. You kind of wonder who runs these things, right? Whether they forget the lessons of the past. Again, HDFC Bank not interested. Everybody else lost their shirts in 2008 on credit cards. 2009, guess what? Who entered and jacked up credit card business? HDFC Bank. Right? Today, they are the largest in credit cards, although thankfully not part of the crowd of bringing us credit cards at Terminal 2 in Bombay Airport. So the disciplined lending aspect, right, is tough. You have to keep it diversified. Adha retail, adha non-retail, within the non-retail, within the commercial and corporate piece, diversified exposure across a range of sectors, disciplined underwriting. And now where the interplay kicks in is because your liabilities are low cost. HDFC Bank's cost of funds are around 5%. Only ICICI and SBI are in that ballpark. Baki logo ka cost of funds higher hai. Because HDFC Bank's cost of funds is low, they can go to the safest credits in the country. So Krish as a home loan customer or say Asian Paints as a corporate customer, They can go to the safest credits in the country and say आपको financing देंगे at the lowest rates possible. And that's only possible because their cost of money is so low, right? So because your cost of money is low, why is it low? Because you come up with a range of smart solutions to gather low cost CA and SA, current account and savings account. Cost of funds low. Therefore, even if you give Krisha home loan at 8.3, 8.4, you're still making 3.3 percentage points of net interest margin, right? So, and you can understand, right? If you have safer customers, more credit-worthy customers, because you're offering them lower cost of credit, your bad debts, your non-performing assets are lower. And the final aspect is leanness on the cost side, right? So it's still even now known as the Baniye ki dukaan, right? It's known as the lean, mean machine. Not surprisingly, the CFO, the guy who sort of kept a check on cost, was made the CEO. Some people weren't the happiest about that, but I thought it was pretty good. She was the guy responsible running the numbers, and he's the guy running the show. And it shows in cost management, right? It's very interesting. Remember, this is the top 10 market cap bank in the world. कोई glitzy headquarter नहीं है. Their headquarters used to be in Lower Parel. They still have a tower in Lower Parel, but it's just like a mini tower, right? There's nothing glitzy about it. And the first branch in Sandoz house, going back 30 years, uske upar they've created a couple of floors for Sashi, the CEO, to sit out of. But other much lesser banks will have a gleaming tower in the glitziest district in Bombay with club, swimming pool, executive lounge area and so on. None of that shosha with HDFC Bank. More pertinently, I haven't seen them use Bollywood celebrities to plug credit cards or loans, right? I'm sure the Bollywood celebrities would love to have an endorsement, would love to have some business with HDFC Bank, but it's very interesting. Other private banks generously use the showbiz stars to plug their brands, but HDFC Bank has never felt the need. And as we discussed, it's doubled market share on either side of the balance sheet without using showbiz stars. So that's the flywheel. You gather deposits at the lowest cost. You grow deposits at a rapid rate. Then you use your low cost deposits to lend to highly creditworthy corporates and retail customers. You diversify the book. You don't chase hot trends. You don't have to, because you've got low cost money on which you can make a generous spread without having to chase the latest fad. You keep your cost structure lean, and the result is P&L. I'm happy to get into the numbers if it's of interest. A P&L and P&L metrics which are very difficult for other banks to match.
Right. So lot to unpack there, and there's few specific things I want to focus on right now, and I'm actually going to start with the P&L. If I looked at HDFC Bank's P&L, and let's for a minute ignore everything that came with the merger. Let's think more of just the pure banking business. What are the primary components within that, and what components within that are particularly profitable?
Right. So let's do the P&L first, and we'll get to the juiciest parts of the profitability. So I'll express everything in terms of assets, right? So assets being loans. It's called in our dhanda, it's called DuPont analysis, but it's sort of the DuPont thing shouldn't worry anybody. It's regular, just expressing everything in terms of assets, right? So obviously a bank makes most of its money from lending, right? And they lend money to, say, Krish for a home loan. I am a depositor, so they pay me an interest rate. And the difference between what you pay as interest and what I pay is the net interest margin. So the net interest margin on HDFC Bank is 4%. That's a pretty juicy margin, right? And it's other banks struggle to get to a 4% NIM because other banks struggle to have cost of funding as low as HDFC Bank, right? Then they make some fee income. So when they give you a mortgage, there'll be some processing fees and so on. The fee income is around 1.5%. Right, so 4% is the NIM as a percentage of assets. Fee income is 1.5% as a percentage of assets. So sab mila ke 5.5% is their earning from lending and fee related activities, right? Then there is kharcha, the salaries to pay, branch cost to bear. That's around 40% of the revenue. So cost income ratio is 40%. Again, amongst the lowest in the sector, right? So 40% cost income ratio. So if you knock off 40%, from 5.5, you get to 3.3%, right? So 3.3%. In banking jargon, that's called pre-provisioning operating profit, right? Don't worry about the jargon. It's basically जो HDFC Bank कमाता है उससे आपने OPEX हटा दिया, खर्चे हटा दिए, आपका 3.3 आ गया, right? Now you have to factor in non-performing assets, right? So HDFC Bank has what is called credit cost on non-performing assets of around 0.6, right? HDFC Bank's gross NPAs are an order of magnitude lower than any other bank in the country. वो 5 साल पहले था या 2 महीने पहले था. By any other bank, I mean any other bank. I don't just mean कोई rubbish PSU के साथ compare कर रहे हैं. HDFC Bank versus SBI, HDFC Bank versus ICICI, the non-performing assets, gross NPAs are an order of magnitude lower. Net NPAs are 0.6. So you now subtract from 3.3% pre-provisioning operating profit से आप provisions credit cost उड़ा दीजिए 0.6 का. You're left with a PBT of 2.7. ठीक है, so return on assets PBT level पे 2.7, obviously they pay taxes, and left with a return on asset of 2%, right? That's the PAT. That's the PAT, or the return on asset is 2%. Now it doesn't sound like a lot of money, but when you multiply that by the 8 to 9x leverage that they take, you're looking at a bank 8 times leverage multiplied by 2, 16 to 18% ROE. Again, some people say इसमें क्या मज़ा है बहुत, 16 to 18% ROE. So now let's understand 16 to 18% ROE में मज़ा क्या है. The Nifty's ROE, the benchmark index 12-13 रहता है. So 16 is a different planet to that. But let's forget Nifty. Let's come to the banking sector, right? Forget 16, forget 14. Just let's set a basic ROE threshold of 12. Right? 12% ROE. Why am I saying 12? Because cost of equity roughly 12-13 है for large banks. In our country, if you take the 40 or so listed banks, only 11 out of 40 have managed to do 12% ROE or better in 5 out of the last 10 years. 10 out of 10, so we'll come to that in a bit. 5 out of 10 में भी 5 out of 10 मतलब 50% hit rate केवल 11 banks का, 11 out of 40. And the threshold is very low, 12% ROE.
And this is any 5. It's not 5 consecutive. It's just any 5 of the 10 years.
We kept giving it really lax. Yeah. It's we're coming off a bull market, so our standards have to be kept low. Now let's do the coffee can wala right discussion. That suppose I wanted 12% ROE every single year. Only one bank has done it. That's HDFC Bank, right? So that's how unique this achievement is, right? We're not saying 15% ROE. 15% ROE also only one bank has done, right? But 12% ROE, something as modest as that, no other bank barring HDFC Bank has been able to pull it off, right? So this flywheel that I described is incredibly powerful, and by definition, nobody else has been able to construct it. In the post-COVID economic recovery, SBI and ICICI have shown a lot of promise. Long may that sustain. I think for the good of the country, let's hope SBI and ICICI's post-COVID recovery in fortune sustains. But it's a recent phenomenon. Those two banks' renaissance is a recent phenomenon. In the last 10, 20, 30 years, only one bank has been able to build a flywheel which chugs out 2% ROA, 2% ROA after tax every year, and thus chugs out a 16 to 18% ROE every year. And it's a bank which, for obvious reasons, has ended up becoming the largest by market cap in our country.
What I don't understand is, okay, I can understand in 1995, nobody thought of the things that they did eventually. But today, you have sort of explained what the secret sauce is. I'm sure there's extremely smart bankers in other companies as well. But my question really is, why has nobody just blindly copied what they've done? Forget reinventing the wheel and saying, I can do an even better job. Why doesn't somebody just blindly copy them and say, okay, I'll replicate them and make as successful a bank?
Yeah. So my submission would be, Chris, that the answers lie more in the realms of psychology. The answers to your question lie more in the realms of psychology and the ability to stand away from the herd. By psychology, I mean the ability to say, boss, this is the fashion of the day. I'm not interested, right? So remember I said that whatever is the hottest thing going at that point in time, HDFC Bank is not interested in that. Now, put yourself in the shoes of a CEO running a listed bank, right? Whether it's Aditya Puri or anybody else. The stock market is judging you. So, stock market asks you, sir, retail lending, it's the best thing since sliced bread. Are you loading up on it? Credit cards, are you issuing them? And through 2003, 4, 5, 6, 7, these guys are showing no interest. And other lenders, as we were discussing, right, are throwing credit cards out of the window almost. And People are going, wow, what a banker. Yeah, he's giving credit cards, making credit access easy. Similarly, 2009 to 13, right? I was working in the financial markets in Mumbai. I remember giving infrastructure credit was seen as a sign of real manhood. And if you really mattered as a banker, you'd be cutting a 5,000 crore check to a crony capitalist promoter. Otherwise, what's your point? How are you helping the India story if you're not cutting a check? I remember those days. I remember so many conferences, sort of banker CEO conferences, where the bank CEO thumped the table, say, we stand behind India, we've cut a check of 10,000 crores for such and such airport or road project. I don't remember any such press conference from Aditya Puriji, right? I don't think he was interested in either thumping the table about, supporting the infrastructure story, right? So it's but natural to get sucked in, right? I would like to believe even in my profession, I've probably succumbed to such fads and fashions of the day. So just like in equity investing, so in lending, there is a prevailing fashion. It's very difficult to resist being carried away by the prevailing fashion. If you're able to resist it and do broadly the same thing year after year, you will succeed. Now, HDFC Bank is not just able to resist it. When that type of lending goes out of fashion, that's when they double down on it and make a killing. So we discussed credit cards. Lehman Brothers, whole generation of credit card lenders in India got wiped out, including many of the MNCs. And 2009, HDFC Bank started ramping up on credit cards. Today they have the largest credit card book in the country. Similarly, corporate lending, right, blew up with sort of great vengeance 2013, 14, 15. Famously in 2015, Raghuram Rajanji, the erstwhile RBI governor, did what's called the asset quality review, and he found that the banks had been lying about their NPA, non-performing assets on project finance loans. And that point in, from 2015 onwards, corporate lending became a taboo subject. Guess who ramped up on corporate lending? HDFC Bank. Guess how much money they've made at it, right? Corporate lending PAT, we were looking at it the other day. Their wholesale business PAT has grown at 25% CAGR in the last 15 years, right? So they've made close to 25x PAT, 25x PAT growth in 15 years in wholesale lending, right? So it's HDFC Bank is staying away from the fads and fashions of the day, maintaining discipline. B, when other people throw in the towel, they're moving in and making a killing. And C, to do this at scale with rigor across the country. Remember, they're opening 1,500 branches a year. Other banks haven't managed to open 1,500 branches from the beginning of time to now. HDFC Bank is opening 1,500 branches. To do this at this colossal scale is actually incredible. I don't think any other bank elsewhere in the world has been able to grow at this pace, at this scale. Remember, I stress again, market share has doubled on both sides of the balance sheet over the last 10 years. Never before seen, this country has never ever seen that sort of growth from a bank.
Based on what I'm hearing from you, I don't know if this is actually the case, but just my immediate sense is that another advantage that HDFC Bank has had is institutional knowledge. And what I mean by that is, for most of its entire lifespan, there's basically been one man in charge. Obviously, there's a large team under him. And similarly, if we could look at another one, say Kotak Mahindra Bank. But other than those two, there haven't really been these sort of kings at the top of the kingdom who've had, I don't mean this in a bad way, but in a good way, that limitless power where they're not concerned that if I don't show growth, if I don't show this, if I don't show that, I'm not going to have a job tomorrow morning. And so therefore, they've had the luxury of saying no, where maybe some people haven't had that luxury. Do you think that is at all a fair statement to make?
So I would agree with you in part, but I would disagree with you in parts. The part of which I agree with you is, I clearly agree that both Uday Kotak when he was running Kotak Bank, and Aditya Puri when he was running HDFC Bank, both of them said no to lots of things, right? There are plenty of stories about that in my friend Tamal Bandhopadhyay's books on HDFC Bank about how Aditya Puri would turn away crony capitalists bearing lavish gifts, thank them very politely. Once, I think there's a famous story that Tamal wrote about crony capitalist offering a very expensive brand of whiskey, very rare, and Aditya Puri asking him how much it is and offering to pay him for it, saying otherwise I can't take it, and anyway rejecting the proposal that a loan be given to the crony capitalist. So I agree with you that there have been more diligent than others, more disciplined than others in saying no. But where I disagree with you is they have not eschewed growth. These rejections haven't come at the cost of growth, right? So to put it in the context of, say, cricket, it's not as if by eschewing risk they are getting their strike rate or their batting average down. They're still scoring at a high average with a good strike rate. So Virat Kohli-esque average in one-day cricket, Virat Kohli I think averages 55 as a strike rate of 90. Right? Some other flamboyant characters might look as if they're hitting it out of the park, but I don't think they get to 55 average. They might have a strike rate of 130, but the average is much lower. So both these lenders, and especially Aditya Puri ji, with all due respect to their Kotak Sahab, HDFC Bank is many orders of magnitude bigger than Kotak Bank. What Aditya Puri ji was able to build was a machine which grows at a strong clip. For the longest time, they were growing at 20%. Only in recent years has the growth slowed down to mid-teens. So you're growing at 20%, often more than 20%, and yet you're eschewing risk. So in cricketing jargon, you're scoring at a very healthy rate, but you're not trying to do anything flamboyant. That's the skill, right? That's the skill, that's the discipline. You're right, everybody wanted to copy it, but they couldn't because they would fall prey to the fads and fashions of the season. And this was even in the post-COVID era where corporate lending, project finance, nobody does in India anymore. So there are fewer places for the banks to shoot themselves in the foot. But even wherever there was a small opportunity, which was personal lending, other lenders in India fell over themselves extending personal lending, and those books blew up. HDFC Bank, I think, has no more than 5% of its book in personal lending. So wherever the opportunity arises to show discipline, show restraint, and yet maintain growth at a healthy clip, this bank has been able to grab that for more than a generation now.
Yeah. And you touched upon this, but I just want to sort of double click on it. There's always this general notion that it's a bank that's focused primarily on retail lending.
Yeah.
And people sort of tend to forget just how large the corporate side of the book is. Forget the profitability and all that for a second. Just sheer scale and, what kind of scale are they operating at? And more importantly, why do you think people have not given them the credit they maybe deserve on the corporate side? Why do you think that's somehow not been part of the discussion as much?
Yeah. So HDFC Bank's scale is actually colossal. So I'll give a few numbers. We'll discuss the book, the composition of the loan book in a minute. We'll discuss the scale, and then we'll discuss why people don't give them credit, because the scale is genuinely humongous. So remember, we discussed that this is a $300 billion loan book, right? So that's 15% of all the loans given in the country. The only book bigger is State Bank of India. And State Bank of India, as you can imagine, a fair bit of the book is Government of India, right? So if the government's borrowing from you and the government's using you as a banker, naturally you're bigger. But since creation in 95 to now, I don't think anybody's been able to match HDFC Bank in high quality asset creation. Now, there's another way to understand the scale of HDFC Bank. 24%, a quarter of India's direct tax collections go through HDFC Bank. A quarter of the country's direct tax collections go through HDFC Bank. 16% of the country's GST payments go through HDFC Bank, right? So it's a colossal entity, lending 15% of system assets and dealing with tax payments around a fourth of the country's tax payments, routing itself through HDFC Bank, right? But let's come back to the book itself, right? So the $300 billion book, only half of it is retail. So ironically, everybody thinks of it as a retail bank, but only Aadha book is retail. So roughly a third is mortgages. That was the big part of the big win from the HDFC Limited merger. HDFC Limited obviously was entirely a mortgage book. Before HDFC Limited came into the picture, only 7% of HDFC's book was mortgages, but now a third of HDFC's book is mortgages, and I think we as shareholders are happier for it. Another 19% is personal loans, right? So that 50% which is retail, usme say the overwhelming majority of that retail book, 2/3 of that retail book is home loans, and the remainder is personal loans, right? Within personal loans, credit cards and unsecured would be around 7-8%, I suspect, right? Now let's come to the non-retail piece, which is the more surprising part of the book, right? Out of the non-retail piece, around a third again is SME lending. right? So SME lending plus commercial vehicles. Yeah, this is one of the largest commercial vehicle loans in the country. In fact, if you speak to the NBFCs who do commercial vehicle finance, they shudder at the thought of competing with HDFC Bank because they say it's impossible. So the large fleets in our country, large truck fleets, their lowest cost financier tends to be HDFC Bank. So in the trucking business, if you are a quality credit, your lender will be HDFC Bank. So 1/3 of the book is commercial loans, SME loans, which includes SME loans and CV loans, and then 19% of the entire book is wholesale loans to large corporates, right? So as I said right a few minutes ago, this part of the book is also actually very profitable, and ironically, profitability in this part of the book, the non-retail side, profitability has galloped in the last 15 years, especially in the last 10 years where other banks have pulled back for a variety of reasons. Balance sheets busted, don't have the risk appetite. So other banks in India have pulled back from wholesale lending and commercial lending. HDFC has upped its ante there, and on commercial lending, profits PAT would have grown at a CAGR of 25% over the last 15 years or so. So the more superficially it feels as if retail mein paisa ban raha hai, but our read is that the non-retail side is actually grown PAT faster than the retail side. On the retail side, lending is at very competitive rates, and fee income therefore enhances profitability. But the hidden star in HDFC Bank's compounding over the last decade, I think, has been the non-retail side of the book, which is unsung and uncelebrated. And I think that's true for the broader bank, right? I don't think the bank ever comes on, doesn't sort of do TV advertisements or social media advertising saying a quarter of India's tax payments go through us. You remember other banks love this sort of thing, right? You'll be on the Western Expressway at a traffic light and you look up and somebody will be trying to talk about how big they are. I haven't seen that from HDFC Bank. And as I said, also they've eschewed the glitz and the glamour of using cricket stars or Bollywood stars to plug their brand. I think that's the nature of the business. Keep costs low, keep the profile low, let the numbers do the talking. And my reading is, now that the merger is gradually getting digested over the next couple of years, the numbers will again start doing the talking.
Right. And the merger is, of course, the major event of recent years for the bank. Now, the merger happened April, as in it was announced April of 2022. And since then, it appears that the market seems to have sulked at the idea that the two companies should merge, and two companies being HDFC and HDFC Bank, parent and HDFC Bank merging. Why do you think, or what do you think the market has not liked about the merger? And from your perspective, why do you think that the market may have overreacted or sort of thought about this in the wrong way?
So I think at the outset, the view was, oh my God, Deepak Parekh pulled a fast one on the HDFC Bank shareholders like us. A lot of people told me, Deepak Parekh has sold a overvalued business to HDFC Bank. I didn't think so then. I don't think so now. Yes, I agree that HDFC Limited, the parent, it was a little sort of trapped for growth because doing mortgages by itself, given that the RBI had relentlessly changed the rules, it had become hard to sustain a high-class mortgage lending operation without a low-cost liability franchise, right? So the RBI had changed the rules over the last 10 years, wherein it became harder and harder to have a big mortgage business without a low-cost deposit. Because if you have a big mortgage business and you're constantly borrowing from the wholesale market, effectively you're borrowing money from the wholesale market at 7.5 to lend at say 8, right? And you can't really sustain a business like that. Plus, as the country got more prosperous, right, and growth, home loan demand emanated from smaller and smaller towns, it wasn't, I think, feasible beyond a point for HDFC Limited to keep opening branches. You were basically duplicating cost structure that HDFC Bank had. So I agree that from HDFC Limited's perspective, the reasons to merge were fairly compelling. But I think from an HDFC Bank perspective as well, the same holds true. Remember, we discussed that before the merger, mortgages were only 7% of HDFC Bank's book, right? Now, mortgage is a great asset for any bank to have because it's super sticky. Typical mortgage hangs around in the bank's book for 10, 15 years, right? Whereas a car loan or a credit card is sort of 2-year typical tenor is 2 years. So that means every year 50% of your book is running off. And HDFC Bank was like that, right? Every year a big part of the book would run off because they were short dated. Those 3 saal ka retail loans or SME loans which were working capital financing. So whereas other banks would only have around for HDFC Bank to grow at 20%, they would have to do fresh disbursals every year equal to 65% of the opening book. Because 50% तो आपका पुराना book roll off कर जाएगा. So you want to grow at 20%. You have to grow the book at you have to do fresh disbursals of 2/3 of your opening book. So colossal amount of money, right? Whereas for other banks, this number was much smaller, right? This number was around 30%. So HDFC Bank had to do 65% of the opening balance. The other banks had to do 30%. So effectively, HDFC was running a one-legged race, while others were running with 2 legs. So from the bank's perspective as well, the incentive to merge the 2 entities together was fairly compelling because they would be able to compete on an even footing, right? There are other benefits as well, which by and large actually are coming through. So for example, one big benefit that we anticipated and thankfully is coming through is a big part of the HDFC Limited franchise did not bank with HDFC Bank. So big part of the home loan customer base of HDFC Limited did not have the savings accounts at HDFC Bank, right? And that's an easy win, right? And similarly, a significant part of the HDFC Bank customer base did not have mortgages from HDFC Bank, right? The mortgages from other people, right? So we felt that you join the 2 customer bases, these are high quality customer bases, you can then sell to them a range of products, not just current and savings account, not just home loans, but remember also HDFC Life ka life insurance, HDFC Asset ka mutual funds, HDFC Ergo ka general insurance, so on and so forth, right? And thankfully that's coming through. So in the results we saw in the current fiscal, the 9 months have elapsed in the current fiscal, and we can see that the cross-sell income fee is up by 1/3, right? So 34% jump in the cross-sell income fee. So putting together 2 superior franchises, big customer base, you can clearly see that they are being able to sell to them third-party products and in-house products and get cross-sell fee. The typical HDFC Bank customer is now holding more and more products with the HDFC stamp on it, right? Where the merger hit rough waters, where the merger hit rough waters was, the merger took place in July 23. Unfortunately, soon thereafter, inflation pumped up in India. Through 24, the rupee came under pressure and the RBI tightened liquidity. The RBI tightened liquidity to deal with incipient inflationary pressures and attendant pressures on the currency. As the RBI tightened liquidity, it became harder for HDFC Bank to jack up the deposit franchise to refinance the HDFC Limited mortgage book. Remember, the HDFC Limited mortgage book was financed by the bond market. The premise of the deal was, given that the bond market ka funding was more expensive, HDFC Bank will finance the home loan book through deposits. But to do that, you need the system to be liquid, and for good reason, the RBI drained system liquidity, thus inhibiting HDFC Bank's ability to finance growth in finance the home loan book through deposits. The second thing that happened was, as I'm sure everybody watching knows, through 22, 23, 24, Indians went bonkers for mutual funds and specifically small and mid cap investing, right? So mid cap mutual funds. So there's plenty of data from the RBI to show that money has been drained out of savings accounts and punched into mutual funds, specifically small and mid cap funds. As the stock market unravels, I think that story will reverse. I think people will get back out of mutual funds back into savings accounts of banks, and that liquidity pressure will ease. And the third aspect to this was that as internet banking and everybody having banking apps on their phones became more ubiquitous, customers obviously became far more savvy that's about having money in savings accounts. So said, "Mereko FD chahiye," right? So I have to confess, I've also done the same thing. I'm still banked with HDFC Bank, but I keep nagging them saying, "Mereko FD ka acha rate do. Why should I keep it in a savings account?" That pushed up the cost of funding. So some of this was foreseeable. The fact that that banking is increasingly done on mobile phones is something that several bank CEOs have been talking about for many years. Some of this was foreseeable, some of this wasn't. And because some of this wasn't foreseeable, those aspects which have upset the merger, I think will get dealt with in due course. By and large, I would say they are 50 to 60% of the way there in terms of financing the HDFC Limited mortgage book with deposits rather than wholesale market raises. I'm not saying it'll be the next 2-3 quarters will be easy, but the synergies still hold. The synergies will come through. The transient challenges on liquidity will dissipate at some stage, and then you get back to the metrics that I explained, right? You make 2% ROA and you make 16 to 18% ROE. Those are great numbers, and if you can keep doing that, you'll get very far. I'll put it another way, right? I was looking at something which blew my mind. HDFC Bank went public in 1995, right? Today it's a $150 billion bank. It's one of the great compounders in the country, and yet in not a single year of its existence has it been the best performing bank stock in India, right? So by far India's largest bank by market cap, yet not the best performing bank stock ever, right? I think that in a way encapsulates for me what's happening here, right? They're not trying to shoot the lights out in any given year. They're happy to take the punches when they come, but they are more happy and they're more focused on being disciplined and grinding it out and building something which I think honestly others will find impossible to build.
I want to come back to something we didn't touch on specifically, but has sort of weaved its way throughout the entire conversation, which is the protagonist of this story, right? It's easy to look at the numbers, but we forget that all of this happens because there's people behind behind the curtain actually pulling the strings. So everybody knows of Aditya Puri and now Sashi Jagdishan as CEO. But there's an entire brains trust that maybe hasn't got the limelight. And I imagine because they didn't want the limelight, they haven't got it. But who are the other protagonists of this story, and why do you think that that large, very capable brains trust has played a big role in making HDFC Bank what it is today?
So I think let's go back to the beginning, right? So I was still in college when all of this happened, but I read about it. Read about it in books and newspaper articles. So what I understand, when Deepak Parekh Saab managed to persuade Aditya Puri to leave his job as the head of Malaysia, I think he was head of Citibank Malaysia. He was seen as, he was widely touted in Citi as a future star. I think the Citi global CEO, global chairman had said, this guy is one of our 50 most important people. And to his enormous credit and to our sort of delight, Deepak Parekh managed to persuade Aditya Puri to migrate from Malaysia to Mumbai to set up HDFC Bank. I think there was a big stock option package somewhere thrown in there. Then Puri Saab arrives in Mumbai and he hires people who are now, I think they call the Dirty Dozen. Sort of first generation of legendary bankers who go on to then build this remarkable institution. And some of the names, I've met most of these people, and I'm sort of, what should I say, gratified that I've had the chance to meet most of these people. So from Citibank arrived Paresh Suktankar, Samit Bhatia and Shailendra Bhandari. From Bank of America arrived A. Rajan and Harish Engineer. From HSBC arrived Louis Miranda and Girish Marathe, right? And these people then set up what we now see. Now, naturally, as you'd imagine, most of them have retired and they're enjoying, deservedly comfortable and I suspect lucrative post HDFC careers. When I meet them, they seem to be very hale and hearty. And thereafter, another generation came in, right? Another generation came in somewhere around 10 years ago. Another generation ascended to the boardroom. So amongst them, you also already mentioned Shashi, but I think Azad Bharucha's role is also noteworthy in this context. I think Azad has also played a stellar role. And the sort of people we interact with, right, who are one below board people who sort of either help us with our custody operations or when I try to do a foreign exchange transfer, right, people who help us, people who are one below board who run departments in HDFC Bank, we find them to be routinely very competent. Right, and routinely bloody hardworking. We obviously have a ding dong with them because you're never satisfied as a customer. यार मेरा पैसा मेरा FX transfer क्यों नहीं हुआ, मेरे को ये rate क्यों नहीं मिला. You obviously moan and whine about whatever service you're getting, but I find them to be routinely very competent. And over the last 4-5 years in the post-COVID era, as HDFC Bank has had some tech challenges, we've raised our concerns as customers about the tech availability, and we've seen significant improvements. I don't think they're perfect. I think there is grounds today that they could be significantly better on tech, but I've never felt that they don't give a monkeys, they don't listen. I think we get a hearing, and if we ask for three things, two work out. I wish they would do 3 out of 3. I would be a very happy customer then. But the ability of the Sashi Jagdishan, Kaizad Bharucha generation to keep this massive institution scaling. Remember, the dirty dozen came in, they set something up, but to run a business of this scale in a country characterized by chaos, which is India, set up 1,500 branches a year, deal with quarter of the country's tax payments, and do so reasonably smoothly. We don't hear about app fad gaya, tax system gir gaya, right? From time to time, all of us are website mein login nahi kiya, mera HDFC Bank app kaam nahi kar raha. We have that, but I think by and large it's been run very well by generations of bankers. If you ask me how they have created the culture, I won't be able to put my finger. I've not been able to quite figure out why this caliber of personnel is not replicated elsewhere. One of my concerns with Indian banking is the quality of personnel, I reckon, is deteriorating, right? It's deteriorating because I think banking increasingly is a highly regulated, highly competitive, utility type operation, जहाँ पे आपको 15% ROE बना लिया तो बहुत है, and therefore the chance to mint a fortune. That era of banking is probably gone in India. I think both banking and NBFC, the chance to mint a fortune and make hundreds of millions, वो चला गया है because in a competitive economy, rightfully I think the central bank is saying banks have to be utilities, ज़्यादा ROE नहीं बनना चाहिए, which means that the smartest, brightest kids are no longer coming here. So in that context of a general sort of drop in the quality of bankers, I think HDFC Bank, the quality of staff has held up pretty well.
Yeah. So Saurabh, let's come down to brass tacks and the ultimate $1 million question. Is HDFC Bank still the next HDFC Bank?
Well, as I gave you the numbers, right? I don't see anybody else in this scale, right? It's just difficult to see who else will be able to pull it off. Remember, post-COVID, we were by and large post-COVID, barring personal loans, we had a benign credit climate, right? So in a benign credit climate, it's like a downhill racer. So the slope is going down. I used to have a Toyota Corolla, on that Bombay to Pune journey. After you cross the Lonavala peak, right? From Lonavala down to Pune, my Corolla was also like a Ferrari. Right? I was a downhill racer, and my wife used to chastise me. I had to get rid of the car. I don't have a car anymore because I used to be a downhill racer. So in the post-COVID era, we've had many downhill racers. But now as the economy goes into a cyclical slowdown, which I think will last for several more quarters, now that the tight liquidity, which has inhibited HDFC Bank's ability to refinance HDFC Limited's home loan book, as that tight liquidity bites, as the slowdown bites, as Indian middle class households who are up to the necks in debt struggle to repay, I think we'll see many of those downhill racers, have a few tire punctures, right? So in this post slowdown phase, post COVID to party tha, in this post slowdown phase, as GDP growth slows and as consumer spending slows and as job creation slows, and as the US president plays havoc with our currency, I think we'll see once again the men and the boys separating. And I think under Bakshi Saab, ICICI Bank's been terrific. I'm hoping that they'll be able to sustain that and stay go toe to toe with HDFC Bank at some stage. We also have Axis Bank in our portfolio, in Kings of Capital and in some of our foreign investor portfolios. We're hoping that under Amitabh, Axis can also go back to the sort of glory days it had enjoyed under Dr. PJ Nayak. Kotak Bank is still very small, and Uday Kotakji is no longer at the helm of affairs. They're doing a good job, but it's a very small bank. So it's really between these three, HDFC Bank, Axis and ICICI. Remember, banking is a highly regulated industry. It's not as if licenses are being doled out left, right and center. It's really these three banks, HDFC Bank, ICICI and Axis. Bakshi Saab has done a remarkable job at ICICI Bank. Hats off, and I wish I had figured it out quicker. We would have made more money. But on the scale of operation, on the metrics, especially credit quality metrics, HDFC Bank is on a different planet. Gross NPAs of HDFC Bank are 1.1, and I think ICICI Bank and SBI are 2.1, right? In the downturn, I think the PSUs will suffer even more than the private sector. So the market share loss story from PSU to private, I think, will kick in again. So is the next HDFC Bank HDFC Bank? I think so. I think it's a class of one, and it's one extraordinarily competent bank. And for the country's sake, let's hope they stay this competent. They stay like the way they've been over the last generation or so.
Yeah, and who knows, they may get another chance for a Centurion Bank sort of situation.
I have a nasty feeling that in this downturn, right, there will be several blow-ups, and I think the RBI will need the bigger banks to bail out the smaller ones. Remember, deposits are super tight. Right? बहुत difficulty हो रही है banks को. All banks are struggling for deposits, but I think the smaller banks are struggling even more. And if the RBI is not able to reflate the economy by punching liquidity in, right? If the new governor Malhotra Saab, if he's not able to get liquidity going, given that credit quality is bound to deteriorate, I just don't see how NPAs are not going to rise. I think NPA तो पिटेगा ही. उसके साथ साथ, if liquidity doesn't improve, I think the smaller banks will be in real trouble. And I think much like that SBI Yes Bank wala deal, right? Remember 2018, the RBI engineered the SBI Yes Bank wala deal, where Yes Bank effectively got bailed out by Yes Bank got bailed out by SBI and a consortium of other banks. I think शायद फिर से उसका ज़रूरत पड़ सकता है. And naturally, therefore, I think the RBI will look towards HDFC Bank and ICICI, I think.
Well, Saurabh, thank you so much. This was really fantastic. And thank you for walking us through the entire journey of HDFC Bank and explaining in tremendous depth what has made this bank so special. Thank you for taking the time. And I hope this won't be the last time we talk. And I'd love to have you on for another Spotlight episode on more companies.
Happy to do so. And I think we're coming up to 30 years of HDFC Bank's IPO. So it's an appropriate juncture to discuss, I think, one of modern India's great institutions. Thank you for having me on this, Krish.
Absolutely. Thank you.